Welcome back. Today we're diving into trader psychology, one of the most overlooked yet crucial parts of trading. Let me be brutally honest with you. The market doesn't care about you. It doesn't care about your account, your setup, your trading plan. It's out to take every single dollar you have. And if you let it take it, it will take it. But here's the kicker. The market is already a very big enemy. But the market is not your biggest enemy. The biggest enemy are you, yourself, the person staring at the charts, making decisions under pressure, letting fear, greed, and impatience rule your trades. That's your true enemy, yourself. And the sad truth is, most traders never even realize it. Psychology is the most overlooked, misunderstood, and most complicated part of trading. You can have perfect setups, flawless key levels, killer order flow skills, but if your mind isn't under control, you will sabotage every freaking trade you will take. Your mindset drives every decision. Fear makes you exit too early. Fear makes you enter the trade too late. And greed makes you stay too long in the trade because you want more, and you will end up in break even or whatever. Overconfidence makes you chase setups that don't even exist. Impatience makes you take low quality trades, and all of these emotions together combined are silent killers. Quietly eroding your account while you think you're learning to trade. So yeah, stay with me, stay with me. Recognizing these emotions is step one. You need to know exactly what's happening inside your head at every stage of the trade. Ask yourself, am I afraid? Am I chasing? Am I following my ego? Because if you do, you will fall for the same traps over and over and over again. Discipline isn't optional. It's the only thing that separates consistent, good professional traders from amateurs, from the liquidity the market needs. And discipline isn't some soft skill you hope it will magically appear. You need to train it every single day through repetition, structure, and especially through brutal honesty with yourself. Some practical ways to train your mind: mental checklists. Before trading, are you alert? Have you eaten? Are you in the right state to focus? Are you trading out of boredom, revenge, emotions? If any answer is no, you step away, of course. Step away. Pre-trading routines, identifying key levels, checking the order flow, writing down the risk per trade, define your entry, define your stop, define your target. This isn't just preparation, it's conditioning your mind to follow the rules instead of impulsive shit. I have I have a very simple checklist in here. You can find it in my Discord. Before you trade, ask yourself, am I in the right mindset? Am I focused? Am I calm? And am I emotion free? If all of that, you can check all of that. If that's okay, you can proceed. You can continue trading. Are you trading edge based, not boredom, no revenge or ego? And are you following a plan? Continue. You can proceed. You can trade. Identify key levels, using order flow to confirm the trades. Is the risk reward ratio acceptable? All of that okay, you can continue, you can proceed. Is your max risk per trade defined? Position sizing correct. Keep in mind that one. People killing accounts, trading micros, and they are unlucky. They opening 5 minis instead of micro. It takes a few seconds and your account is dead. Especially with the prop firm drawdowns. Stop loss in place, all of this. So if all of this is you, if you can check it, if it's all green, continue, proceed, trade. Mental preparation, very, very, very important. Is your briefing okay? Focus, is your focus okay? Either you are exercising or whatever. It can be very, very key for a lot of people. A lot of people do like yoga or they do like fitness before they start to trade. Do some running, some jogging. It's yeah, it's very key for a lot of people. Trading is not easy. Do you have a clear trading goal for the session? You need $200. A lot of people they want 1,000, 1,500, 2,000. You are not going to make that every day. Not with trading 1 mini, 5 micros. It's it's not working like that. It's not. If you want big numbers, you need a lot of money and high contract size. Emotional awareness. Is there fear? Is there greed? Is there impatience? If one of these things are present, step away. Go do something else. Do something else. Because the market will rob you over and over again. If your mind isn't ready, your trade isn't ready. No excuses. Nada, niente. Nothing. Journaling. Not just writing the trades down, but dissecting your emotions, thoughts, mistakes. What triggered your fear or your impatience? What triggered the greed? How did your psychology affect the outcome? Reviewing these things will regularly expose your own blind spots. So I'm not journaling myself. I do always, every day after trading, I look back in the charts. Did I miss something or whatever? But I do not journal. I tried it. It's not a thing for me. For me, it's important to look back at the day, what happened, and which entries, executions did I took, and what else was there. For me, that's enough. But that's just me. There are a lot of people. They need like journaling, very well organized things to have a clear mind. So let me make this very, very clear. Mastering your psychology is far harder, way much more harder than mastering the charts or setups. And it's far more important too. You can't fake it. You can't trick yourself into discipline or emotional control. You need to train it, measure it, reflect and repeat until controlling your mind becomes a automatism, a second nature. It's all screen time and making a lot of mistakes and record it, journal it if necessary. It is the way it is. The biggest enemy in trading is you. It is you. It is literally you. Trading is a war. The market is relentless, unforgiving, and it will exploit every weakness. But your mind, your psychology is the battlefield you fight with yourself on every single trade. So master your psychology, master your mind, and the market stops being your enemy. Trading becomes way easier. And also keep in mind that you're trading idle. A lot of people right now are a big fan of Fabio Valentini, great trader, great trader. So no trash talking here. He's way better in trading than I am. But let's take Fabio Valentini or Ripsy. Ripsy, it's a monster trader. Or whoever you are always following on YouTube. They trade real funds with high contract size. If Ripsy drops a long on Nasdaq, market does plop, it pops. Okay, it pops. 100 contracts, plop, it pops. They are your enemy because they need your bids and your offers to either execute or get out of the markets. So better trade aside with them, or at least, very important, most important, trade a repeatable, logical system with an edge. Take entries from key levels which already proved the interest from big money. And they call it POI, AOI, array of interest, point of interest. If you think that key level is interesting, it's not interesting. The key level is only interesting when order flow confirms that big money is interested at your area of interest. You can read it in the order flow, you can read it in the volume, you can read it on the bid, you can read it in the ask, you can read it by significant delta changes, whatever. But we will talk about that in another episode. Join the Discord. You can get this thing out in the Discord. I do have other ones also more trading defined instead of psychological. This is very important. So this is a order flow series. This is order flow, the way to consistency. This is part 2, but this is one of the most important parts. If your mind isn't ready, trading isn't ready. No excuses. Peace.